Management of City Union Bank, and Kamakodi, who is the Managing Director and CEO at CUB, joins us now to talk about their business outlook. More importantly, what's happening in the financial space itself. Thanks a lot, Mr. Kamakodi, for joining in. You know, the last few days, we've seen the RBI crack down on a lot of NBFCs for multiple reasons, be it gold loans, be it IPO financing, a whole host of things. The question is that, you know, you're in similar businesses as well, credit cards for, and gold loans. Do you think the impact of that could perhaps be a benefit on players like you?
See, basically, we are not, let's say, having a big portfolio in credit card and all. We have just started. It is a very small portfolio. But gold loan per se is one business. Probably, as you know, we are the oldest listed credit card bank entering to the 120 years. And our experience in gold loan is almost 120 years because since the bank started, it was one of our main products. Basically whatever you said, all the banks, particularly the old generation, both public sector bank and private sector banks, which have reasonably stronger processes and proven systems for the gold loan portfolio, and banks will continue to go in that direction. And there is basically a difference between the market what the banks cater to and also the NBFCs cater to. It has a difference in terms of even the starting from the branch distribution and all. So the branches will continue to do the gold loan in their own portfolio, and I don't expect any major impact because of this. And anyway, any regulated entity that want to be in any business, they have to fully be compliant. And I'm sure every regulated entity will, take steps to take care of these issues, and they will be in a position to move forward. And it will be business as usual for every other regulated entity per se.
Mr. Kamakodi, just two quick questions in this gold loan business. One is, I think, with the developments of the last 48 hours, the whole debate around the entity in question, one of the talking points was the use of cash in disbursal of gold loans, and whether, what is the limit? And apparently the limit is 20,000 rupees, but a lot of NBFCs are disbursing in cash way above that limit. Just your thoughts on this, and how are banks sort of dealing with the usage of cash in the gold loan disbursal sort of situation? And again, the entity in question is going to be sort of 30% of their business gets impacted. Do you expect banks to gain more? Or which are the entities that perhaps could stand to gain, given that there is higher scrutiny on some NBFCs with respect to the gold loan business?
See, the issue is if you closely look into, the cash disbursal is being controlled by, apart from the regulatory inspection, you have Income Tax Act and other act which clearly specifies what is the highest amount of cash you can deal with. And there are specific approvals for banks in terms of the quantum and all. And every entity is expected to be compliant with those regulations. And any entity, if they have not done in the past, I think nobody has any choice to not to follow this type of instructions and all. And these are all not something which cannot be. I think the respective entities will take care of that. Particularly with respect to this thing. You have say for example on NBA non-banks, how much you can give as a cash across the counter, and how much you have to give it in the account in a bank account credit. All these things are specifically defined, and there is no question of not following these instructions or rules. They more than rules, these are all basically controlled by laws. So you can't have an institution who can not follow these sort of things. And all these whatever you say, I think every entity will correct their practices and take care of things. And the entity in question, the overall market share in terms of these things, it's not something in a large percentage or so. And you have n number of gold loan NBFCs who are doing these sort of things without these issues for long years and all. And I don't see any. Okay, there are certain breaches and certain things are not followed, and these things have been pointed out, and respective institutions should take care to comply with these things and move forward is what I feel. And I don't think that this is going to alter the P&L or business model of any such entities by following these rules and all. And these are all going to be, like, if the respective company want to do that, they will be in a position to do that.
It's a shorter than usual conversation, but useful. So useful to get that from you this morning. Thank you very much for joining us, sir. And it's a pleasure. Great to have you with us here on the program. Well,